Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the price of gold has leapt overnight as investors are struggling to remain positive. But first up this morning, there was another dairy auction and another fall in overall prices. But the fall was small in the circumstances, down 2.85% from the prior auction 2 weeks ago, and taking the total reduction due to the China virus to 7.6% in US dollar terms. Our currency is also lower, so today's drop in New Zealand dollars is only 1.6% and the drop of the last two auctions only 4.3%. Given that we're now well into the back end of the dairy season and some parts of the country are getting very dry, this fall in prices won't hurt the milk payout prospects too much. World equity markets aren't so forgiving, however. Wall Street is back after a long weekend and has shed 0.6% from Friday's close so far in a risk-off mood. They followed European markets who were down a similar amount. Yesterday, Shanghai was down sharply in early trade but closed flat. And Hong Kong, however, dropped 1.5% and Tokyo dropped 1.4% in a day. Locally, the ASX 200 fell a much more modest 0.2% and the NZX Capital Index actually rose 0.5%. It isn't all gloom, however. The New York Fed's Empire State Business Survey found a sharp rise in new orders in its district. That was enough to hold firms reporting of their expectations at a somewhat subdued level. North of the border, however, Canadian factories aren't so positive, with their December manufacturing sales down more than they were expecting and holding their overall 2019 growth at just 0.5%. In London, it is more gloom, with the giant global bank HSBC signalling it is returning to its roots, shifting out of Western markets and concentrating more on China. And that will involve shedding 35,000 jobs, although most of them will be by sale of the units rather than shutdowns. It is a clear signal that despite the current coronavirus issues, it sees a better long-term future in Asia than in Europe or the Americas. The change comes after yet another year of missed targets and previous reorganisations. The bank is now losing shareholder support and may actually be unmanageable. In China, the COVID-19 infections rose to 73,500 and deaths rose to 1,875, and that's a higher rise than the day before. Exports from China seem to have ground to a halt. Fewer than a third of Chinese migrant workers have returned to work, and it's a very tough situation for airlines flying China routes. US Treasury 10-year yield is falling today and is now under 1.56%. That's a 3 basis points drop. And gold is up $22 to $1,603 an ounce in a very sharp risk-off move in New York today. This is the first time the yellow metal has been above $1,600 since 2013. And US oil prices are now just under $52 a barrel after a small fall overnight, and the Brent benchmark is also lower at just over $57 a barrel. And the Kiwi dollar will start today lower by 0.5 cent at just over 63.9 US cents. On the cross rates, we're lower too at 95.5 Australian cents, and against the euro, we're down to 59.1 euro cents. That means our trade weighted index is now down to 69.8 and a cumulative devaluation in 2020 of 3.2%. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.